Market analysis involves studying a company's customers and competitors along with the overall industry and environment. It consists of environmental analysis, competitive and industry analysis, analysis of product positioning, marketing segment analysis, and customer analysis. The environmental analysis includes 5 different segments. First of which is the political climate that involves all laws and regulations, governmental competition, and taxes. The social environment covers cultural trends and changes, educational levels, and changing demographics. Demographics are the characteristics within a population. This can include things like gender, age, and where they live. The economic environment relates to economic conditions and price and availability of raw materials. These can change depending on current economic affairs, such as a recession. The technological environment are new products and product improvements. Companies like Apple are always changing this environment since they add more products and continuously improve them with competitive and industry analysis. In the market analysis includes the levels of competition and the investigation of competitors. There are 4 levels of competition. The example in the book goes over clothing at Target. The most direct competition for that would be Kmart and Walmart. All promote lower prices and have multiple clothing brands in the store. Target's next competitors would be department stores. They sell clothing in multiple brands, but they are higher priced and higher perceived quality with well-known brand names. Then, a specialty store would be a clothing store that only sells a particular brand like Banana Republic. Finally, generic competition, like Office Depot. They don't sell clothing, but they are still in competition for consumer dollars. Investigation of competitors is to investigate any direct and indirect competitors to assess their competitive advantage. While investigating, you'll find out the competitors' strengths and weaknesses, product positioning strategies they use, their target market, their customers, why consumers buy from them, and what makes them unique. How do they promote and advertise, and what competitive advantage they possess. Brand parity is when brands are perceived to be highly similar and the only difference is the price. An example of this is airlines. When searching for an airline ticket, most people don't have a specific airline they have to use. They only want to get there and at the cheapest price, which is why airline search engines like Expedia and Priceline are so popular. Brand equity is the opposite. The company's goods and services are perceived to be different and better. When you have brand equity, you have brand awareness, perceived quality, brand association, and brand loyalty. Apple and Nike both have brand equity since they have all 4 of the other components. Product positioning involves the place a good or service occupies in the mind of the consumers and relative to the competition. There are 4 components: the target audience, the good or service, the frame of reference or category, and the point of differentiation or uniqueness.